Hello everyone, myself Vaibhav. In today's session of Visual JForex, we are going to work with the indicator named Stochastic. This is a fairly old indicator developed in late 1950s and it has been extensively used and one of the most easy to understand and easy to use indicator. This is part of the momentum series in which we are getting familiarized with various momentum indicators and seeing how these indicators can be used to design and develop the automated trading algorithm on the Visual JForex platform. So here comes the stochastic indicator. We don't really have much description given here, so we will straight away head to the Visual JForex board developed by the Dukascopy Bank SA. Here it is listed amongst the indicator momentum and so far we have seen these indicators, many of these, and now today it's the turn of stochastic, and in next few sessions we will be covering the stochastic first and the stochastic RSI. In yesterday's session we considered the stochastic momentum index. Now coming to the stochastic, the start point can be any of the three. Let's take on tick as our start point for today's session. Here this is the indicator block for which we need to define these input parameters, depending on which we will have the output value, the slow k and the slow d, and then we can use this algorithmic setup to figure out the opportune time to get entry. Both for entry and exit purposes we can utilize this stochastic indicator. We will also plot this on the chart so that it will be easier for us to understand how this indicator works. So here coming to the USD JPY chart, which is for the 1 hourly time frame, we have plotted the stochastic with the default configuration 5 3 SMA 3 SMA. So here I will explain to you on the input parameter side of this stochastic block. The default instrument is the instrument which you want to use for developing the algorithm. If you are developing the algorithm for Euro USD, keep this instrument as it is. If you are working with any other instrument, you will have to change it and select that particular instrument from the list provided here. For today's session, we will work with the USD JPY. So we have chosen to keep the USD JPY as our default instrument. The time period will need to be changed to whichever time frame you want to work with. You can choose starting from 10 seconds to 1 month, and depending on the time frame you are choosing, your stop loss and the target will be proportionate to the time frame. If you are going for the shorter time frames, then your stop loss target will be pretty sharp. If you work with the larger time frame, then you will have to keep the stop loss and target wider. So that's how this system works. For example, let us take the hourly period as our time of choice. Now coming to the shift is the loopback period. If you want to take into account the current value, then the shift needs to be kept at 0. If you want to go back in time, say for a couple of hours, for example by 5 hours, then you want to have the lookback period at 5 and you will be getting the output value which was 5 hours back, since we are using the candlestick time period of 1 hour. So here we will change it to say 5. Now coming to the fast K, slow K, slow K type, slow D period, and the slow D MA type. So here these are the basic building blocks of this indicator, and these parameters go on to cast significant impact on how we can use these indicators. So depending on how we define these parameters, the K period, slow period, and the D period, we will have the output values. Now first let me explain what the K period stands for. K period is basically, the percent K period is basically the normalized value of the difference between the closing price, low price, which is divided by the difference between the high price and the low price. So if you want to exact formula, you will have to do a bit of search, but I will explain to you. What happens is you take the particular time period, the time period of your choosing. So in that period, whatever is the difference between the highest value over that period of time and the lowest value, it will be taken into consideration, and it will be put in denominator, and in the numerator we will have the difference between the closing price and the low price over that given period of time, and then we will take that ratio, multiply it by 100, and here we will have the percent K value, and afterwards we take the SMA of that percent K value. Suppose if we are choosing a time period of 3, then we will take the SMA value of the percent K, and we will have the slow percent K value, and that's how this system works. So here you can see the editing options provided to you. Now the first K period is at 5, that means the last 5 candles difference, the highest value and the lowest value will be taken into consideration. Okay, it's not changing, so we keep as it is. Okay, pardon me. So here, as the fast K percent K period is 5, so here we will be taking into consideration the fluctuation over the last 5 candlesticks, and here we have this difference between the highest value and the lowest value, and as I said, the closing value and the lowest value difference will be taken into consideration, and then we get this first percent K period, and then we take the SMA of these values over last 3 candlesticks period, and we get the slow percent K period, and since we are working with the SMS, that's why I said we are going to take the SMA. If you choose the MA type, you can also work with the EMA, WMA, DEMA, TEMA, TRIMA, KAMA, MAMA. So here we have plenty of options to work with, and depending on which MA type you get, you will have the different output value. There will be some variation in the output value, and when we take the again the SMA of the slow K period, we get the slow D period. So if we take you can say the average of the average of the percent K period, we get the slow D period. So here the time frame for which we are doing the averaging is going to be needed to be defined here, and if we change the value, we will have the different output values depending on the input parameters. Okay, so we are here going to define these stochastic indicator values as per our requirement. Now coming to its functioning, we can use this indicator both ways to work in the manner so that we get entries with the trend, and also we can utilize this indicator to figure out the overbought and oversold scenario. So you can basically use this indicator as per your requirement, and as per the existing widespread use, the entry once the price action has been in the overbought territory, and when we see this crossover happening, the slow K period crossing below the slow D period is considered as the bearish signal, and this is the time to go for the fresh short sell trade. And when the indicator has been in the oversold territory, that is the value below 20, and when the crossover happens, when the slow percent K crosses above the slow percent D, we see it as a sign of turnaround after having been in the oversold territory. So here you can go in for a fresh trade execution as and when this crossover happens. So that way you can work with this indicator. Otherwise, what you can do is you also bring in some other trend identifying indicator and simply use these stochastic values to gain entry as and when the crossover happens in your direction of the trend, which is going to be determined using another technical indicator. So you can work it like that, or you can even go with these overbought oversold trades. So there are multiple ways which can be put to use with this indicator, and this is fairly simple also, and also it will make you aware of any changes in the trend as soon as it happens, as it is fast responsive. So you will see the turnaround happening pretty soon after the price change, and there is not much of a lag. So here this indicator is fairly useful, and that's why it is one of the widespread indicator even after for 50 years of development. So here I will explain to you what happens when we change these parameters to some extent. If we change the MA type, even in that scenario we will have the different output values. For example, if I make it EMA, please observe this SMA plotting on the lower half of this chart. Here you will see that as I changed the MA type, we have the change in the plotting of the stochastic. If I make it TEMA, again it has changed, and now again it has changed. And it's not really necessary that you use the same MA type for both these flow K and flow D. You can even choose different values, different types. Here you can choose say MA, and you will have the change in the output value, and also the price type, what difference is being taken into consideration, also casts an important impact on how this plotting is done and when we get the trade signals after the crossover. So you have all these choices provided to you for experimenting with, and depending on how you design these input parameters, you will have the output value combination, and given the extensive testing you will be able to figure out what is the most opportune setup which will help you find out the trading opportunities which will bring in more profit and less losses. So you will have to figure out the combination and then define these parameters just according to the combination which you feel is likely to prove more profitable. You can change these values as well. If you want to work with the different time period, you can change that. Say for example, you can make it 7 or even 70, it doesn't matter. Whatever period you want to work with, you can just change this input parameter, and you will observe that change taking place in the plotting of the stochastic. That means the final output, the slow percent K and the slow percent D values will be impacted because of the changes in any of the input parameters. If we change this, this is how it's gonna be. If we make it 10, again there is change. So this is a excellent opportunity for us to do the experimentation and then see what is the combination which is likely to bring in profit and minimize our loss making trades. And that's why you will need to do a lot of experimentation, and I hope you will do that and you will be able to figure out any combination which will take away the burden of trading by sitting in front of the system, and rather you will be able to enjoy the fruits of the algorithm's labor. So that's it from my side for today's session. We will be back with a new indicator in tomorrow's session. Till then, have a fabulous time ahead. Goodbye.